Alright everyone, how's it going? This is Evaluating ICOs Part 2. Before, just a recap, we talked about looking at ICOs from a venture capitalist mindset. And we used a WTF model, meaning double U's, and then the TFs. And then these, again, we covered them last time, but I'll just talk about it really quick. Unique value prop, unfair advantage, the team, the technology, the traction, and the finance, and economics behind it, which is actually really important in crypto. So one of the suggestions I got was to kind of go over a ICO, and then someone just gave me one called Videocoin that we can look at right now. And I'll go through another one we've been looking at called Argo, which has been mentioned in the chat a lot of times because of the airdrop. And I can kind of compare and contrast what is a good ICO versus a bad ICO. The first thing you guys have to keep in mind is that every single ICO has a team behind it that is trying to raise money. Now, is that good or bad for you as the consumer? Are they raising money just to get a cash grab, or are they trying to build something that will last a very long time and increase the value of the token? Hopefully it's in the short term, or will it survive long term? So these are the things I want to cover really quick. So the first thing we talked about that I was going to cover was Videocoin. And a lot of times you can monitor some metrics like the Telegram, but these can be spoofed. But the Telegram has 41,000 people, so there's clearly some interest in the community based off of that one metric, which I'm telling you can be spoofed, so I don't look at it as much. They have a lot of mentions in news, that's all right. So let's look at what the technology and the use case is first. So they're trying to compete with YouTube. So it's actually, at first glance, it's like, well, that's a big market. A lot of people like watching streaming videos, but on the second thought, there's a lot of other video streaming services that have all just died out. So what does Videocoin and its platform do differently than what YouTube does, right? So there's Vlogger, they talk about PowerTube, so you can share your content. You can have end-to-end VR systems, and then they talk about having 360 and 4K VR videos. They have ads, free cast, but then you're thinking about it like, does YouTube do some of these things? Maybe not the VR 4K stuff, but can Videocoin even do what YouTube can't, right? So these are things you kind of take with a grain of salt. They're going to mention technology that may not exist yet, but sounds really exciting. But in venture capital, that's all the time that happens. There's a new technology, it may not be fully developed yet, and you're investing purely based on the idea. So total addressable market is big. Can it compete with YouTube? I mean, it's very difficult. So I won't give it that much points for that. So if we keep moving on, they've raised $50 million. Now, at first glance, you might think, wow, that's great. They've raised a lot of money. But if you look at the tokenomics, let's look at the token economy right here. They've raised $50 million, but they've sold $100 million in the pre-sale. And if you scroll down here, there's only 12% sold in the pre-sale. That means this 100 million represents 12% of the tokens that are sold. Doesn't sound very good, especially if $50 million was raised. Okay, so if you think about it, 12% in the pre-sale, $50 million were raised, and this $1 thing is completely irrelevant, right? This $1 is doing the hard cap at $882 million. And that is very expensive for a token project. A lot of the best projects aren't even worth a couple $100 million. So that, again, is already a red flag. Next thing is the 12%, 106 million tokens. That is a huge chunk. So there are people out there who got a really good deal. I don't know exactly what discount they got, but it could have been very big if the total cap is $50 million. So again, if it was worst case scenario, it's 12% of this. So that for 10% of 50 million, they are going to make like a 20x, right, out of the 105 million if it was worth $1. But again, I don't think that 12% is actually 12% of this 50 million. That would be a little too ridiculous. So the first thing you think about is, okay, if I am buying this at $1 and there's $100 million waiting to be dumped, and then those people are making a profit, that's not going to be sustainable. So this $1 is probably not going to hold, just from a first glance at the tokenomics. So I again would not approve of the tokenomics here. I think if you're buying in later, you are going to get screwed from a huge dump. Now, there's always a strategy of buying it. Let's say it comes out, it's $1, and then it drops all the way to 1 cent. maybe it could be picked up at a very low price, but then you're just playing a game of swings, which is not necessarily a bad thing in crypto, but that's just another game other than ICOs completely. So from a total supply of tokens, I think 50 million, if this was like the valuation on the release, that actually might be okay. But knowing that people bought in the pre-sale 100 million tokens out there, so $100 million worth of tokens are just out there waiting to be sold, this token hard cap doesn't make sense. I would start at $100 million and then add on whatever the public sale was. So it's probably a couple 100 million tokens out there that are going to dump. So if we look at the pre-sale, so there's only 100 million tokens out there actually. So if we're going to say this $100 million token is going to drop by half, that's 50 cents already. So again, if you got an ICO for 100 million tokens, you're going to probably get a 50-cent haircut just on the $1 pricing. So again, this doesn't quite add up to me. In general, hard cap is too high. And if it's a $50 million hard cap, that's for the just a sale, that's too high as well. All right, so I've spent too much time on the numbers of the token. Let's go into the white paper very quick. They talk about 82% of internet traffic, so it's a big market like we talked about, which is always is good. They go through a lot of math on how they're going to deploy video from the encoding, the CPU. I don't expect most of you to understand. I personally do not understand all of it as well either. But it's funny because they talk about proof of stake, which Ethereum itself hasn't figured out yet. So most likely they haven't figured out a good version of proof of stake either. They talk about mining. So like if you support the system, then you will, if you contribute CPU, I'm guessing you will get rewarded. And then it talks about what the actual token utility is. And then, actually it doesn't actually tell what the token does here. So I'm going to hope that it tells me somewhere here. Nope, it doesn't actually tell me what the token does here either. Yeah, so that is actually another red flag. What can I use this token for, right? Is it just to pay content creators? Is that really good incentive? Why don't I just pay a content creator in Ethereum, right? So that's another red flag to me. I have heard of this project from a while ago. Halsey Miner is a great advisor. So the team, if it's under Halsey, it's actually a very good guy. If these are just advisors though, I'm just not sure how much time they're putting in. So advisors passes a test, they look really good. And to have content creators, studio heads, and then of course technologists, and then an entrepreneur, very, very successful entrepreneur. So the advisors are good, that they would get points for that. And then of course, let's look at where's the technical team. Before I get to the technical team, the roadmap is here. You're looking at a beta of July of 2019. So even though the ICO was like May of 2018, it's over a year before they're even going to see anything out on the beta. There's going to be a network alpha in January 2019. So that would be interesting to see how that goes. I thought I remembered seeing the team somewhere here. Learn more. Again, all these things that they're talking about might not actually be good. They talk about regulation, so they're gonna say that having a decentralized video service is better for regulation. But you would think that if pirated video or copyright video goes on a decentralized video platform, they could get targeted by the law. So I actually think this use case might actually be at risk for being a decentralized platform content creator, right? So again, that's just another red flag. So there's been quite a few red flags that have come up already just from reading this. I'm just gonna do another glance. I remember seeing a typo here as well. Yeah, right here, encryption. They spelled end-to-end encryption, which is like really spelled wrong. I don't know why they haven't caught this. And then using the blockchain didn't really explain why they needed blockchain, right? So that's another red flag as well. Here's the token use case. So it's going to power the mining of the platform. Again, it's okay use case, but like what can I spend the token on? That's the question. Do I spend it on crunching computation for my video? Why would I do that if I can do that on YouTube, if I can post on YouTube for free, right? So you got to be careful of that too. And then finally, The engineering team. So one of the things that I usually look for is like very public teams. Like, can I see their LinkedIn profile? Can I see their past history? And a lot of this, besides Intel, most likely this guy's hired by the advisor that was the CTO there. This, other than that, I don't see really that many company history things. There's just people from Intel. So yeah, nothing, no like high profile exits, companies, accomplishments, and there's no LinkedIn profile links. I can't evaluate that based off of this. If I do a Google search, the very top developer, I click on the top 20 LinkedIn profiles. I don't know which guy it is. Like I look through here looking for Intel or Videocoin. It's not very easy to spot who this guy is. So like if he was a rock star developer, he should show up. He should have a lot of connections and a lot of people looking at his profile. And I did the same for the other guys. I did a search for Alexander Korshak. Cannot find out which guy it is. So this is another red flag. Like the technical team, the actual team is hard to find information about. The advisors, very famous people, but who knows how involved they are, right? I'm looking for who's actually the CEO, who's leading the team, who's developing, and there's not much info. So that's another red flag. So looking at this, I'd say the advisors are top notch. They're probably the best advisors you can hope for a project like this. Market size is great. Technology, again, I have no idea. I'm looking at the technology. They talk about proof of stake in the white paper. I go to this summary page. They talk about proof of work instead. So I don't know like they're probably not exactly sure what technology they're using. So that's a red flag on the technology piece. So team, again, advisors are really good, but I can't find any information about the technical people. Unique value prop. Yeah, there's not many video blockchain projects out there. Maybe decentralized video is a unique value prop, but YouTube already exists. So how can this compete with YouTube? And how does this have a defensible technology if YouTube is already so, popular and very good? I mean, YouTube is a very good product. Why would I care about this? So there's no unfair advantage. The unique value prop is just decentralized YouTube. Again, it's not very strong. Technology was a red flag. And then traction, I don't hear anything about partnerships, anything on any content creators. Like what if they had some famous people creating content? I don't hear anything about that, so I don't see any traction there. And even economics behind it, $50 million token hard cap, except the pre-sale people have 100 million tokens already out there. Again, that doesn't add up. Like $100 million, just starting from there as the smallest possible number, does not look like you're going to make your money back for a dollar token. So I suspect this will be dropping a lot on the ICO or the exchange release. So that's my first example of an ICO review of a company that doesn't really pass the test. I'm going to look at some other ones. If you go to like ICO drops, you'll see some, like for example Omega One, they're raising $60 million. But then trade execution platform, you look at other, for example, let's look at Kyber. Like Kyber is only a $50 million cap. So if you're buying in this, you're going to probably lose money. There's 0x that's doing really well. There's AirSwap. So I'm looking at other projects. I'm looking at comps. That's another method for valuation. AirSwap is $13 million. So basically, you're looking at a $60 million starting point. People have gotten a better deal as well. So why would again, nothing unique. Other products are out there, and then the valuations of those are smaller. Let's look at some other high profile or like big raises, maybe like Elon City, 33 mil. And this is decentralized power infrastructure. I was looking up WePower earlier. Oh boy, clicked on UGS accidentally. So WePower, look at this market cap, 13 mil. So they raised 33 mil, and then we have a few examples out here. SolarCoin was another one that's actually in production, 3.3 mil, right? So again, like you look at other energy ICOs, they're not doing well. You don't expect 33 million to do well. So I know this video is running a little long now, so I just want to jump over to Argo. Argo is the one we've been mentioning a lot because there's an airdrop happening now. So first, you want to understand the technology. What are they trying to do? They want to be a public blockchain. Sure, everybody else wants to be a public blockchain. They want to be a hub. Okay, that's interesting. What does that mean? We'll look into that. And finally, Argo Marketplace. Okay, now it's it's a one-stop shop for software apps, computing resources. A little more interesting now. A lot of other projects do claim the same thing. And then, so let's keep looking at it. So they're using delegated proof of stake. That's what a lot of other projects are using for scalability. So from a technology perspective, maybe it's just on par, but at least it can scale for this use case in theory. They have a lot of, they mentioned Argo SQL, which is a database thing they're developing for the chain. They're also doing a hub, which has all these other, so basically you're starting to see like a bunch of technologies being implemented to form a whole ecosystem of different services running with each other. And then finally, Argo Marketplace, you start seeing the bigger picture. Okay, they want startups to be using this chain, they want enterprises to be using this chain, or subject matter experts to be using it, and they want startups to share their algorithms, and then all the way rolling up to enterprise. They want public cloud services and data centers to share resources to startups and to SMEs, and public cloud services to enterprise. So basically you have a whole ecosystem here. Can it work? That's the question. But the market is huge, right? Enterprise, basically it's an enterprise blockchain that can work with startups, work with SMEs. And then also, if you want to look at Blocko, this is where the company that used to, like a lot of people from CoinStack created Blocko, which has existing customers that use a kind of fork of Bitcoin, I believe. But developing this came from CoinStack. So this team has a history of delivering a product with customers. In fact, let's just jump to team. I wasn't going to do it yet, but let's jump there. This guy, Phil Zamani, if you listen to him in interviews, he's just very knowledgeable. He has a history of building teams. Again, you see all these LinkedIn things are good. There's no red flags yet, right? So he was global VP sales, biz dev at Red Hat. So this is an infrastructure project for IT resources. This guy has a huge experience for that. I don't see a CEO. Maybe that's a red flag. I do see committee heads. I see advisors that are good. The tech team, another kind of mini red flag is that there's only one Solidity developer, but on their white paper they say there's 25 more developers. So I don't know if that's including the ones from CoinStack or Blocko. Everyone else is just very strong database developers. I'm not sure that's enough for this project, but again, at this point, they're probably using the funds to try to hire some blockchain developers as well. And don't forget, they do have blockchain developers from CoinStack as well. So team is passes the test. Again, from the Videocoin, I think the advisors are perfect for that kind of project. This one is a little more ambiguous. There's people from, again, Phil Zwane, perfect for this project. Hung Young Park, very, very strong database guy, just like the other tech teams. You see a pattern of like where the teams come from. And then you have a person from Lemny's Cap. He's a VC. So basically, he probably got a board seat from putting a lot of capital in this project. I personally met with a lot of these people. They're great to meet. If you meet people, have meetings in person with these people, it's another way to evaluate. Quickly, I know this is going pretty long. Find out what the token utility for, and it is very clearly what is it for. It's for the ecosystem, running a smart contract, payment method for technical support, the hub services. So basically anytime you use this ecosystem, you need to pay tokens. So there is some inherent value to get the token and then spending it. So you want that back and forth of spending tokens. For example, the Videocoin, it's like once I earn the token, I just want to sell it, right? Argo, it's like if I really want to use the services, I want to use it for this ecosystem. So the token utility passes the test here. There are other things like token distribution. They sold $30 million. So $30 million versus the $50 million is a much better number. So basically, Argo just needs to do 60% performance of Videocoin and do the same, which is a huge head start. They sold 30% of the tokens for sale. So the total hard cap is about $100 million. So now you got to think about, is $100 million a good number for the total cap? Just remember the other Videocoin was $1 billion worth, right? So $100 million. I'm looking at some other similar projects. Let's look at Ontology. It's another enterprise project. And then I look at the price of that. It's $352 million. Now we're talking. We looked at the exchange examples, the energy examples. Those have very low market caps. And then we look at blockchains developed for enterprise, and you start seeing 350 million. That means we're looking at 3.5x return. That means the airdrop, if it matches Ontology, if the airdrop is even just $500 airdrop, it's possibly $1,500, right? So basically that's what we're pushing people to get into the airdrop for. Another example is Icon. Icon is $250 million. Let's say worst case, it's even half of Icon, you're still making a profit from the total cap. So just look at this, look at these caps from these like other projects that are similar in nature. Enterprise, have a lot of partnerships, have a great team, and then the idea is sound, right? So I could just keep going on. The other kind of mini red flag is that you won't see the main event until end of next year. But we should start seeing a test network sometime coming out in the next quarter. I'm very excited to look at the test network to help even evaluate it further, or just to see how much the coin could be worth based off of our ICO investment. So I went through this fairly quick. I know I hit the 20-minute mark, and your attention spans are only so much. But I look forward to looking at other ICOs with you guys, kind of going through this methodology. Again, we talk about the unique value prop. It's an enterprise blockchain. There's a private and public chain. If we go into the details of the white paper, which is way longer than the Videocoin one, by the way. But basically, they kind of, if you look around, they cover all bases. So they have the public use case, they have the private use case. They want to make sure that if you're a company, you really want to use this blockchain, and that's great. I think that is a unique value prop compared to a lot of the other projects. Unfair advantage, maybe this is not in their strong suit. Their technology, we don't have enough of a glimpse of it. We don't have a review of their code or anything. So this is a little bit tough to evaluate. Sorry, technology is here. An unfair advantage, this will be based mostly on their traction. Team, I think, is strong enough. I'm a little bit worried about finding what the blockchain engineers are, but the rest of the team is good. The traction, they have a lot of partnerships already. They have Blocko, they have CoinSec, and all their customers that are already using blockchains. So again, very high likelihood they're going to get some traction for this project compared to the other ICOs we've seen, which have like 0 people that are signed up to use it, right? And then finally, finance and economics. We already talked about the total size of the raise, the hard cap, and then the market cap compared to other projects that are similar in nature. So finance and economics passes the test, traction passes the test. Technology, they're using existing ones, so it kind of passes the test, but we have to be seen. I'll put TBD for that. Team passes the test, and unfair advantage. Again, this one is a little bit hard to evaluate at this point too. It would only be an unfair advantage based off of the technology and the traction, in my opinion. And then unique value prop, it is a very clear target of who they want to use the blockchain, clear use case for the blockchain. What I'm hoping for is when the testnet comes out, we actually see some interaction, some actual people using it. That would just send this, in my opinion, up in value. Again, not a financial advisor. I always have to put that out there. And then again, token utility kind of goes in. This one is sound as well. So we really like Argo. That's why we keep talking about it. We want you guys to get in on the airdrop. But again, you're gonna see a whole bunch of ICOs. I mean, there's just looking at ICO drops. Look how many there are here that are not even released yet. There's so many. So it might be harder to get into some of the good ones, but we'll again guide you and look at these together throughout these next couple of months. It's gonna be exciting. And just as we mentioned before, with the bear market, a lot of these are in stealth mode. Once we, if the coins come up in value, we will start seeing a bunch of these pop up trying to raise money. So that's all for evaluating ICOs part 2. Again, I used the same principles as we kind of went in part 1, and I looked at a couple projects. We looked at basically we just kind of covered this: the team, technology traction, token utility, finance and economics. But just going through the project in detail, looking at the white paper on some of these is very helpful. Eventually, you just kind of go through fast. For example, I just looked at a few of these energy ones, the exchange one, and quickly just pass them, right? Just because of the comps. So yeah, that's it. I look forward to talking to you guys in the Telegram. Welcome for feedback. If you have any questions on the video or on future content, let us know, and we will interact with you guys. So I'll talk to you guys later.